It is over, guys. I put on my black shirt. It's funeral time. Look, all the influencers are telling us, dude, it's done. Meltdown. Shit. We will not hold Bitcoin. My God, what's going on there? Look, and we've seen the market crash. Like, I'm not going to pretend that there isn't a move to the downside yesterday, continued today, actually ever since the Fed meeting. And what did the Fed do? It cut rates, but it was a so-called hawkish cut. So basically, Jay Powell was very hawkish in his statement, saying like there will be less cuts next year. And it almost seems like he's a bit of a bitter guy, tries to spit into Donald Trump's soup in a way. But look, regardless of these personal things, let's look at what's actually going on. And there is so much life-changing information in this video, especially if you watch it until the very end, that, it would be a crime to really not learn the things that I'm going to tell you right now, right here, so that you can maneuver through, phases like that. I've been through tons of bear and bull markets again and again and again. And there are evergreen learnings that you need to understand, okay? Don't listen to the influencers alone. This is fear sells, like sensationals, like yellow press. It's like, how can I say, like stupid people get aroused by that nonsense for the lack of education and personal strength. So let's go further. What do we have here? Top stories like everywhere. Powell says Fed cannot hold Bitcoin and not seeking to change that. Well, he didn't quite say that. He said that this would be a decision for Congress. So you could also interpret saying that, Powell just suggested for the Congress to change the mandate of the Fed to could be able to hold Bitcoin. Or you could say, he said we are not allowed to do it. You know what I mean? Like, both of these statements are true at the same time. But the strategic reserve that Trump is working on, or allegedly working on, or Senator Lummis is for sure working on, that is, it doesn't even need to be by the Congress approved. Because there is like this Dollar Protection Act that he supposedly is going to use for that, so that he wouldn't be like buying the full million of Bitcoin, but like to some extent, get the ball rolling anyway. So you see, like, these news, they're tailored in a certain way. And that's why it's really important that you understand where and how you actually get news that drive your decision making, okay? And yeah, Bitcoin dropped. I think we went even below 94K earlier today. Right now we're trading at 96.1. But hey, it's still close to 100K. Like, what happened? Nothing. It's very, very positive. And again, we're not allowed to own Bitcoin. I'm very immune to these things by now because they just serve one purpose, to get you into your feelings, greed and fear. But if you are someone with capabilities, with, also let's just say emotional strength and awareness and the ability to think things through, to create a plan and stick to that, and these things don't matter to you. Absolutely not. And let me get now to the actual part of this video. So what are actually reasons why Bitcoin and also MicroStrategy stock are actually, especially in my opinion, long-term wise, very good and interesting assets? So first of all, we have had a historical resilience of Bitcoin. For over 15 years now, it has consistently rebounded. It has been declared dead for millions of times. And let's not forget what's coming in 2025 now. We have a pro-Bitcoin political environment in the US like we've never had it before, ever. Not just in the US, like it's insane, like actually, if you think about it. Then the introduction of the fair market accounting, the FASB, man, you have no idea. That will allow companies that adopt a Bitcoin treasury strategy to declare its Bitcoin assets as profits. And MicroStrategy is banking on that big time. So the first quarter of MicroStrategy will probably show massive profits because finally they can actually have it on their balance sheet, And we continue to see institutional assets, interest, increasing inflows in the ETFs. Like the Bitcoin ETFs in the last 11 months overtook now 25 years of gold ETFs. Okay, it took 11 months for Bitcoin ETFs to reach the size of gold ETFs in 25 years. Those are facts. Those are not opinions. And we barely started, okay? So what, like, that is factual, actual information, okay? Then the strategic reserve asset. So Bitcoin's decentralized nature and deflationary supply make it a strong candidate for a global reserve asset. It does. Of course, it's a long stretch, but you got to have a thesis that your decision making is based on, and again, long-term holders maintain confidence in its value proposition, because if you have studied Bitcoin, and you should study Bitcoin for at least 100 hours before having an opinion about it, then I have never met a single person that hasn't changed its opinion to a positive opinion about Bitcoin after studying it properly. Maybe, if your information about Bitcoin comes from these kind of sources, then you will not have the accurate picture, okay? Volatility is an opportunity because it allows you to get back into the asset at prices that are undervalued. And that's actually, you should see this as a feature, not as a bug. And particularly when it comes to MicroStrategy, it allows that stock to have tremendous interest in the options market, in the tens of billions of size. And that, brings all sorts of other things with it that really pushes that flywheel. And, so that's why you should see volatility, you should welcome it. It's like, when you have a big fusion reactor, what do you think happens inside that? There's like big things going on, but it's well engineered. And the engineering is actually contains the danger of these massive disruptions. Like, just a most simple example would be a car engine. A car engine is basically explosions, but those explosions have been engineered in a way that they actually created our cars that take us from A to B and actually enabled all this economy that we live in today. Okay, so don't be afraid of volatility. If it's within an engineered space, then embrace it, understand it, and take advantage of it. Okay, and again, also global adoption. We hear so many stories. Supposedly, the UAE has bought like $40 billion worth of Bitcoin already by now. And so we continue to see global interest in it. Putin, hate him or love him, probably most people don't like him too much. Anyway, I don't have an opinion about that right here, right now. That's not the topic. He said, nobody can stop Bitcoin, for example. Powell, before now this what was here quoted, said hey, Bitcoin is more like a digital gold. So generally, we see there is more and more and more international interest and statements of very important people that are actually Bitcoin positive, okay? Just quickly about MicroStrategy, because probably I'm going to do some more videos about that, but MicroStrategy is heavily tied to Bitcoin, okay? And when Bitcoin goes up, it goes up even more. And, it went up this year 469%, so that it will correct at some point, that's just normal. But nonetheless, MicroStrategy actually is doing a conservative financial management, so it has very low leverage. It cannot be margin called so easily as you read it everywhere. Or, Michael Saylor has also been declared a loser so many times, and he has seen through everything really in a tremendous, admirable way. And he continues to articulate and show up and work really hard to explain his thesis that he is really, really, not diverting from. And it's paying off. It's working well, They have acquired a massive amount of Bitcoin by now, and they are securitizing that Bitcoin, meaning they are making convertible bonds available to the bonds traders. They have an options market because of the volatility. They have the stock market that is actually increasing the amount of Bitcoin per share. Like, there's so many positive things happen there, and you gotta be blind on both eyes to not see that and take the opportunity when the market gives you the opportunity, okay? And now I could go into all that, why the price of the stock has been suppressed because of the ATM selling that he has been doing, meaning he's selling new issued stock to buy Bitcoin. But that is accretive because he's adding it to the balance sheet immediately again. That's too much maybe for this video, but if you understand these things, if you study these things, then, this is the new Amazon, this is the new Google trade, this is the new Tesla trade that you missed over the last decade, or maybe you were too young at that time. But if you missed that Bitcoin MicroStrategy trade for the next decade, you will lose out on millions, my friend. That is my firm opinion here. Future catalyst, inclusion in the S&P after being included in the NASDAQ now, why in the S&P? Because now with the FASB reporting, he can actually show it at earnings. And then in the first quarter, and it's very, very likely that actually his earnings will be so massive that he will actually be added to the S&P 500, which will bring perpetual buys into the stock more and more and more, meaning perpetual buys into Bitcoin. This is insane, guys. If you don't see these things, then I don't know what you're doing. what are you sleeping on? And Michael Saylor's leadership, like, I think the guy is a visionary. I really, really admire how much work he puts into that. How many interviews he gives, how much he thinks through this stuff and continues to bring amazing, ways to explain it for everyone, from the very sophisticated, educated to the most simple ways. And again, I really think you should embrace that a lot more than all the FUD, the fear, uncertainty, and doubt. Fear, uncertainty, and doubt is usually coming from a lack of information, right? And you gotta have the information in order for this to, in fact, become, a decision that is valuable that you make. You cannot just make a decision based on emotions. Emotions are not your best friend. People always say, like, oh, trust your heart, your inner feeling, your gut. Well, that's the most wrong thing you can do when it comes to investing. That's so funny because it's so counterintuitive. If you only follow your emotions and your feelings in investing and trading, you will lose everything very quickly. So really understand that this is the end game of personal development, is to be a successful investor and trader. If you do that, you are... you're a giga chad, literally. Every single one of you guys that's actually doing that. Yeah, and again, there's a strong investor base for everyone who really studies and understands Bitcoin and what Saylor and MicroStrategy is doing. Volatility is a feature again. They have a track record of stability, So I think that is really, really positive things you should not ignore. Now, let's look at one more thing here. So why might the Fed actually ease its hawkish stance? Again, I think Powell did that to cause trouble for Trump, right? So the Fed surprised the market not too long ago with bigger cuts, like the 50 basis points, and so the Fed does pivot away from hawkish rhetoric sooner than expected. It did that with a 50 basis points rate cut when basically there was no reason to do it. And there are so many zombie companies in the US, significant debt. They will not be able to roll over their debt. Like the whole economy in the US is really, based on refinancing. And there will be a moment where that will actually otherwise collapse around households, cities, governments, that's really a big deal. So even the US government itself has a tremendous amount of debt. And obviously they pay for the debt by issuing new debt. But nonetheless, the central bank needs to acknowledge these things, and it cannot, ignore also global trends. Have you seen other central banks recently? Have you seen the economy in China, in Europe? Basically everywhere is struggling, and that's why we're seeing rate cuts. Basically also, the ECB has cut rates faster, and that puts pressure because otherwise the dollar would continue to go up and up and up. Look, we're trading at 103 euro dollar. Like yesterday I was speaking with friends and actually asking for a bet if the euro will trade below dollar parity. I think it's possible, even though parity seems crazy because the US has so much more debt, but Europe has so much worse of an economy, So again, we have debt refinancing necessities. So debt needs to be refinanced. And again, there is no alternative. So the global financial system that we live in, it needs the low rates to have the ever-growing debt pile roll over. This is actually another reason why Bitcoin could be a solution to that. I'm not saying it will be, but I'm saying there is a good case for that if you study and understand it. And again, we also have deflationary trends, like technology, entertainment, real estate. They are experiencing deflationary pressures already. So, and that could, even remove the need for the Fed to have a more restrictive monetary policy. And also not forget political and social considerations. If you cut rates, that's politically advantageous and will also help an economy to thrive more. And that's what Trump wants, actually, right? I don't think that the Fed can just, do its own thing, continue to keep rates high forever. And again, even the numbers that they are basing their decisions on, the CPI or the NFPs, they're nonsense. Just the CPI alone is an imperfect measure. It's like some sort of a basket, like a synthetically created basket of the average person, but it's nonsense. For example, if they see oh man, the inflation on beef is just much higher. Let's replace beef with chicken in the basket. It's such a doctored number. It's a Frankenstein number that really has no particular value. Also, CPI is a vector that is different for everyone. It depends very much on what are you consuming? Which goods and services are you buying? If you're a rich guy, And you will have much different other things that you buy and need than if you're not a rich person. Like if you just look at the price of pizza, living in your parents' basement, then you will not experience inflation. But if you are in a normal paying job and suddenly your rent goes up, the gas is higher, the food is more expensive, then it's a very, very big issue. If you're a rich guy, none of these things matter to you anyway. So you know what I mean? So CPI is really an imperfect number. And again, the devil is in the details. You need to understand those details. Educate yourself. Like, what's preventing you from educating yourself to make sound financial decisions that make you rich? Like, what? There's no excuse for not doing that, in my opinion, especially in this day and age. If you're just out for the quick money, I promise you, my friend, without education, you'll never make money. And if you make quick money without education, you'll lose it again quickly. So what's the point? Really learn to earn forever. Like, what's more beautiful than that, honestly? Again, rising dollar implications. I just talked about that. Consumer behavior. So there's a bunch of things. And now I just want to quickly talk about like how to behave when you go through a down market, a crash, a bear market. First of all, you need to have a thesis. If you don't stick to a thesis, then you don't know where you're going. And then you don't know where you're going, you're confused and you're afraid and you're manipulated by outside opinions and situations. But if you know exactly where you want to go and why you want to go there and how you're going to get there and which obstacles you have to overcome to get there and which problems may come down your way, then you will be much more equipped and able to not get swayed away from your path, right? That's very important. Again, next point is embrace volatility. Volatility is nice. It gives opportunities, explosions happen and then they come back to the mean and you can take advantage of all these things. Instead of being afraid, when the market goes down, it's not going to go to zero. And when the market goes up, it's not going to continue up forever neither, okay? Understand these things. And also, very importantly, surround yourself with the right people that have the right mindset, that also develop their opinions based on studying, on real information, on education, and not on YouTube FUD or news FUD or taxi driver talk or any of that stuff, okay? Surround yourself with the right people and avoid toxic influences. Look, of course, crash profits could be right. At the end of the day, even a broken clock shows the right time twice a day. But you want to live in a state of fear of a crash all the time, then you're missing out on all the opportunity that is actually the real momentum going on. Look at any like stock market, Bitcoin, like anything long term. Which way is it going, up or down? Which part do you want to be? It's like Albert Einstein said, you have to make the fundamental decision. Are you in a hostile universe or are you in a benevolent universe? And this is how you build your decision-making strategies around it. Obviously, don't be naive. Don't be stupid. Don't be over-leveraged. None of these things actually brings me to the next point. Avoid leverage. If you trade CFDs, futures, any of these things, and you leverage too much, you will probably be forced out of your positions and you will not hold anything back to when the market goes back up. Okay? Buy the real spot, dollar cost average, sit on it, and that's it. Don't be greedy. If you're too greedy, then your emotions gonna force you out, or you will simply be over leveraged and the market will force you out and it will humble you and it will take away everything you have. And then a few years later, the market will go back up and you will have nothing to show for it. But when you buy the real spot and you just hodl it, you just keep it, and then the market goes back up, then you have it actually, the real commodity in your possession. So why would you actually gamble with leverage? Why? Why exactly? You can leverage once you have a real better, emotional stability, a clear idea of what you want to do. And also, you just want to use your capital more efficient. Then yes, you could do a moderate amount of leverage. But if you are just a beginner in trading and investing, stay away from leverage and trading. Stay away. I'll say it again. Stay away. You will lose. And that's why, more importantly, think long term. Invest with a horizon of several years. Even though I don't like the guy, I guess not too many like him anyway, but Bill Gates once said, people overestimate what they can do in 1 year and they underestimate what they can do in 10 years. That's a very smart statement. We'll have to give it to him this time. And think like that, if you if you think in decades and you really, put your decision making in place that you will continuously grow over a longer time, then you will accumulate wealth. There's, 1 + 1 = 2. It's it's an inevitability. It's not possible that it will not add up and work out if you accumulate and do the right things over and over and over and over again, long term. Don't overreact. Don't give a fuck about short-term price movements and any of these things. Look at the bigger picture. Stick to your thesis. Put, analysis in your research, in your thesis. Challenge your thesis, of course. But don't be influenced, manipulated by fear porn that is all over the place. It's just there to distract you. That's the only reason why it exists. So zoom out. When in doubt, zoom out. MicroStrategy is up over 400% this year. And historical trends often provide perspective and reassurance during downturns. That's why no leverage, because if you leverage, then you're just afraid, oh no, if it goes down another $1,000, I'll be out of my trade. Buy the real spot. The spot, you just buy it, you hold it, that's it. It doesn't cost you anything, especially Bitcoin. 0, why would you not? And again, be opportunistic. Look on the positive side of things. Look for opportunities, Actually, you should have a clear idea on the chart at which price levels you want to buy. How much, which quantity, at what price. Maybe even put limits in there already. So when you have dips, you actually snatch up prices, cheap prices for really good assets. And you can accumulate that over time. Again, there will always be dips. There will always be volatility. Use it to your advantage, not against yourself, okay? So have a philosophical view, Markets will have downturns. And, it's not a catastrophe. Be understanding about how things work. You breathe in, you breathe out. Everything works in cycles in the universe. Everything. So why would this be different? Stay calm, have your perspective in place, and, the market's not going to die. Look at the bigger picture, the fundamentals, what is the intrinsic value of your investments, like the real thesis of why you're buying something, whether it's the S&P, whether it's MicroStrategy, whether it's Bitcoin, like why are you doing that? What is your actual thinking behind it? And is that reason still in play? Yes or no? And then if yes, even if the price is not reflecting that, that would be actually a reason to double down, to add to your exposure, not to reduce it or to be forced out, okay? And understand that there will always be market dynamics that are like cross currents, they will come like a storm and try to get you off your course. Central bank policies and all of these things, and they will create, volatility, temporary uncertainty, blah, 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 all these things, like right now actually. But that stuff, you just unfazed. These things don't matter to you. And then I understand the broader macroeconomic forces at play, debt cycles, inflation, and anticipate the real market shifts, especially when the pricing isn't matching the rest, because there will be a lag, there will be a delay, there will be a mispricing, but those are opportunities, okay? And don't you ever, 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 ever panic sell. And, you will only panic sell when you have, a future or a CFD in place, that will kick you out because you're over leveraged, or when you're not doing the research about why you're keeping an asset. Sure, if you say like, okay, this story didn't play out, this stock is too much beaten down, it doesn't make sense anymore, all of the things that I assumed might happen in my analysis and research did not come into fruition, then cut it off. At the end of the year, do a rebalancing. Look at it at the end of the quarter. Like, have a method, and continue to focus on the long-term trajectory. Don't be emotional. If you're emotional, like, give me one good situation in your life where when you reacted emotionally, it actually gave you a good result. I don't have one. I don't. And over the years, I've become, I wouldn't say like unemotional, but the next best thing. I have much more focus on good emotions, actually. Appreciate volatility. It's an opportunity. So I'm just repeating that. And diversify your information sources. So look, you shouldn't be in an echo chamber. You should not only listen to people that say the same thing as you do. But if you look at opposing opinions, it should be of respectable people that are actually trying to bring up their case, that are also educated. And so someone like Peter Schiff tries to do against Bitcoin, even though everything he says, in my opinion, has been clearly wrong and debunked. But he's at least not saying you're all idiots, like, we're gonna die, the Fed. I'm just looking now here at MSTX, it's trading at 74. Too bad, I put a limit at 63. I missed it by $5. You see, that was a dip I wanted to get. I was too greedy with my limit. A couple dollars more up and I would be up 10% already now. There. Normal. Next opportunity will come. Take it easy. It's fine. Again, be prepared for ups and downs. Expect market fluctuations. I am prepared mentally. Like, really, I endure that. I don't overreact. I don't look at my phone the whole time. I cannot sleep and any of that nonsense. Like, really, in a way, I'm actually happy that so many people are interested in markets these days. And I never thought that being a trader could be culturally as relevant as it has become, But don't fall for this trader rapper type of nonsense, Good traders are really focused, capable, humble people, And all that other stuff, the social media nonsense that you see, that's exactly feeding you the wrong picture, the wrong education, the wrong behavior, and it will just take your money. Don't do it. Okay? Seriously. And again, leverage downturns strategically. So today, we have December 20th. It was a beautiful day to buy a dip. And even if it dips further from here, keep your powder dry. DCA into it. Don't use leverage. All good and fine. So that's my video today, explaining to you why today is not the end of the world. If you like this video, leave me a comment, let me know whatever else topic you'd like me to talk about. And thank you for watching and for sharing this for everyone that you think could have value from that as well. Bye-bye. See you on the next video.